Hey guys, Youth Fields here. Let's go over the portfolio for this week. So here's a just a broad overview of the market this last week, provided by Stock Analysis here. So we can see that the technology sector was almost all red. The healthcare sector, sprinkle here and there, besides maybe healthcare plans, was mostly red, and you can see for yourself. There's quite a lot of red here in a lot of different categories. I mean, there's green in the consumer staples area, and we'll see that probably in our own portfolio in just a second. But yeah, moving on to the portfolio sections, we have $11,698.71 in our portfolio, and you can see here $95 of dividends or to our cash. If we go into the activity, we got 44 of those dollars on the 28th and 2 cents from Home Depot. So that's cool. Just a quick recap. I'm not spending my dividends until the end of every month, or basically the second week of every month. That's when I put my purchase order in for around $2,000. The reason why is, especially for the case of this right now, it's not technically it's more performant to actually do it uh basically the not the least amount of time, but so ideally if you put your money in every year, you're actually doing very well, but that's a long time to wait. So a lot of people just do quarterly, but for me, because it's just simplest, the simplest approach, I do a monthly. But previously we were doing a lot weekly. I mean, I say a lot. It's probably only about $50 a week, but you know, that kind of after 4 weeks is it adds up to about $200. So, anyways, let me get into the actual portfolios. So you can see here that our QTAL went down about 1%, with TQQQ down 7.48%. Quite a lot. You can see that this is heavily misweighted right now, which really blows. And I'm very curious. So I think I'm not sure exactly how M1 Finance's like reinvest or invest auto invest algorithm works. If I had to guess, it's still not going to prioritize this because our other um, portfolio or slice is still a lot further behind. You see, it's 18%. So I think that's going to be interesting. And you can see this is technically overweight, but we could do like a reinvest button here, which would sell. Um, and, you know, I was saying not to do this, and technically it's not very good to do this, but ideally, when we're trying to get out of a position, it's best to do that. Obviously, so I can go ahead here and say you can see here it's saying we actually have lost $1,300 through or on WiMAX. I think this is excluding dividends, but that's a lot of money. Obviously, with BTOL we've gained about $268 dollars. Sorry, but we've lost $710 on TQQQ. So, and those are the ones that would be rebalanced. So if we were to rebalance these, basically what that would do is it would sell enough of, sell enough shares to get this down to 25% and 20% respectively, and then boost pretty much all of that amount of money would go into here. Basically, what I'm trying to say is, it essentially sells and buys to try to get to your targets as best as it can. And I've been holding off for a while because I'm really annoyed with, I'm hoping WiMAX goes up. But if we look at the month view, I mean, it's down 5%. So I'm not really sure how much longer I can hold this. Like it might just be, it might just keep dropping. So I don't know. And you can see here 3.5% down, which really sucks. But we can check real quick actually what the last price is for this. I think it's $13.50. And I remember the world not too long ago where this was perfectly hovering around like $19. So I don't know, man. It really sucks. And this money could probably be doing a lot more work in the future, anyways. The dividends are nice, but I mean, we already have. Well, yeah, I was gonna say that we already have the shares. I mean, technically, if we don't sell, we can just keep getting these dividends, right? $50 dividends ish, which is nice, but you know, at the end of the day, $50 is not much, especially for having 4,500 in it. I mean, that is a lot if you look at the actual annual return, but anyways, you also have to look at the loss of your capital gains. So moving on to balanced portfolio, down 1.4%. And then if we see here, consumer staples, like I said, is up the highest, and the lowest is semiconductors, down 7%. The majority of that is actually from AVGO, but NVIDIA is also down quite a lot. We can also see technology is down 3%. The majority of that coming from Google. Well, technically Alphabet, right? And then highest, which isn't much, is energy as the second highest. And yeah, and we can also look at real estate, I guess, but this is such a small portion of our portfolio. I mean, that only is up 82 cents. But yeah, unfortunately, that portion is down quite a bit. We can see on the Webull portion here, we're up or back up a little bit, not by much, but yeah, man, it sucks to be in the market right now, right? And I'll be completely honest with you guys. I'm a very new investor, so seeing these kind of numbers really um, makes me feel a certain way. Obviously, not good. But I understand that people have gone through exactly these areas before, and it's the people that sell that end up regretting it. But it's just a matter of, how many times do I have to tell myself that before it's actually too late? Or like, before I burn through all my funds. So I don't know. Just got to keep an eye on the funds, and really, the best indicator of that is this Google Sheet, which shows us, the weeks that the market is up and down, and how that correlates with ours. And for the most part, is pretty much the exact same, right? So up, down, 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 up, down, up, down, 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 up, down, right? So yeah. But getting to the numbers, you can see here that we have lost about $233. That's 1.86% of our portfolio. The S&P 500 portfolio would have lost $187, or 1.48% of the portfolio. So, yeah, I mean, we're in the red as well. We've basically lost about $600 of our own money. But I still am glad I've done this rather than just hoard it into a bank account. I mean, I think I have a high yield savings account with SoFi, and I think their current APY is like something in the three. Let's see, SoFi savings account interest rate, right? If I could type, yeah, 3.8%. It was almost 5% when I first got it, but this shows you just kind of how the economy is doing right now. And also some other stuff like with interest rates. Obviously, it's not just that, but anyways, you can see here on the numbers for yourself, and I'll zoom in a little bit, and you can see that both portfolios are under the red line, which is the amount of money we've put in. So yeah, that kind of started at the at maybe the end of February. Sorry, I couldn't think of the month, but it's been about a month, and we've seen this growth here, or I guess lack of. But I think this annual dividend is a little bit behind. I don't know if I put in the last 2 times, so I need to get on to that. So if anything, just think of that plus maybe roughly $90. So what you saw in the account. So just over $1,500 in the last year, which is a lot. But yeah, and plans going forward, I'd say that we probably want to really consider the future of the portfolio, and that's why I was kind of leaning towards this balanced portfolio here. You can actually see the QTAL had the least amount of loss on the three of them, and I've been noticing that recently, which is interesting. It's just, I don't know, you know, and that might be true, but also I think I've only noticed it when I don't know if I've noticed it on the positive weeks, whether this is lagging behind. So I should also probably take a look at that more often. But nonetheless, guys, I'm eager to invest more. This is obviously the future of my my portfolio. So I think I'm looking forward to investing more, and hopefully, there's some months, green months ahead. I actually was taking a look, and let's see, a month. If we look at S&P 500, so you can see the last month has been all red, pretty much. There's a few sectors that did decent. If we look at SPY stock and go to like the last month, we're down 6.5%. So obviously, we're not doing too hot, and year to date we're down about 5%. So this is just something we're gonna have to live with probably for the next little bit. Um, whether or not you want to call it recession, geez, is up to you. But um, yeah, I don't know. But that's it for me. And as always, I wish you guys a wealthy future.